Welcome to Trading Lounge and the S&P 500 for the 30th of March. So we're looking at this here, just going back over things. So being Monday, so an A wave here, a B wave up here, rather high for an expanded flat taking out the top here, but we've got to go with that. Well, one of the reasons we've got to go with that for is, well, we've only got 3 waves here. Now, I know that some people have been counting 5 waves up to here and then having 3 waves up to here and having all this as wave 4 here at this point and then having wave 5 up there. But to me, that's forcing things. And also, too, when you look at some of the bigger stocks, we'll just use Amazon as on the weekly here as an example here. So we've got a nice A wave down here and then 5 waves up here for the A wave here, back for the B wave, and then up for the C wave here. So we definitely got a B wave here, and in this case it hasn't gone way above up here. The thing with this though is that in terms of trading from here is that sure, we could put this under here as a running flat correction, but I'll just leave it out of the way here first because we don't know well, the whole COVID-19 situation. We can, on timing on that regard, we can see that Italy may be plateauing out this week, and once that's established, then that will give a timeline for say the UK, which is probably 2 weeks behind, and then the US and some of the Asian countries and so on. They're all at different points of time, but it will create a timeline at that point, and we need to be aware of that information because people will be are looking for reasons to pull triggers to get in at low prices. So yeah, but look, in terms of trading, what I would want to see is I would want to see this major level here, number 2 here, as a support. And we know that this would be the way that it does it is the arrival, the reaction, the first high above the level, and then we need it to come back and test. The breakout's important, but the retest is just as important, if not more important. And then we need to get the second high here, and we need to start to look to build in long over this side once it occurs. But it needs to sit on the level. In no way so far has it sat on the level. It's tested it and made new highs and all sorts of things, but it's not sitting on there. It's like this here. We have the arrival, the reaction, the first high above the level, a correction here, and we just take out these highs here and we just trade to the next number and we get out. As simple as that. So we're looking for those things, and that's what we're looking for over here. But this could just be down for 1 here, back for 2 here, 3, 4 and 5 here. I don't know. I mean, we just got to work it out, So anyway, I'm just rabbiting on. But anyway, that's why we've got this situation here. What I don't know about this situation is that, yes, I can count 5 waves down here. I know everybody else counts 4, and that's fine. I can see that. And look, I could be wrong. It's not a problem, And if I am wrong, well, then we get 1 more wave down here, and then we get our ABCs back up at that point there. The other point with this is that if this is 3 waves, then we'll be going sideways further here, or we can just have a different type of correction with all of this as well. So all I can do is take it step by step. Otherwise, we just get into the guessing game, and we need to trade our setups. That's all we can do at this stage. So anyway, let's dive in and have a look. So on the daily chart here, as I mentioned, we're counting 5 waves down here. I know that some people have just got this here as copy this here as wave 3 here and wave 4 here. And that's valid as well. All of my 5 wave structure here depends on this little extra second high here, this second low here, second higher low. And on the DJ, that's actually higher than that, so that's possible. So I'm not sticking my head in the sand at all, but the other point here that makes me think that I'm on the right track is that we've got 5 waves up to this point, so we should get a wave B back and then a wave C up, which will take us too high for a wave 4 here. So even if you're looking for a wave 4 here, and wave 4's, you know, the 38.2, which is very close to 40, which is say 40% here, and this has moved to 50, that's still okay, you know, as a 50% retracement, you know, coming back to this wave 4 of 1 lesser degree. So the wave 4 is still, you know, still valid at this particular point, but we do have 5 waves up here, so that's going to put a bit of pressure on the folks that think that this is a wave 4 here. But like I said, it's not about being right or wrong. It's about making money. It's about having trade set up. So we use the trading levels. We use the Elliott wave pattern to give us the direction, and we use our levels, which are just the psychology of large numbers, and setups. And signals, that's all we're looking for, and if we can get that, well, then we're on the right track. So let's just move in here and pull this apart further. So on the 4-hour chart, we were looking for wave A to go to the lower end of group 2. So group 2 is a trading level thing, so it's 65 to 650 here, and then 72 and 80. So we're looking for the lower level of that. We've got that. We've also covered this. Was there a gap there? No. Maybe I'll check on the cash. Either way, we're looking for 5 waves up here, and then we're looking for an A wave and a B wave and a C wave coming back into play here, down into this level here. Now, it may not come all the way down here to the 60 magic golden mean golden ratio. It might come just down to where the volume is sitting, you know, the support down here at 2400. On these nice supports here, so we need to be mindful of that. So the other thing too is we're working with this number here, the 2,500. So I call that a medium level, halfway between 2 major levels, the 2,000 and 3,000. And the market hasn't got that as support yet. It's coming back to check on it. But it certainly doesn't have it as resistance yet either. So it's basically a sticky number, and it's sticking to that particular number. And what we're looking for here is a pattern. We're looking for a setup pattern, so which is the arrival here, the reaction, the first high above the level, and then we're looking for the ABC pattern, which comes out and looks like this here. So the arrival, if we can consider this to 2,500, the arrival, the reaction, the first high above the level, the ABC correction coming back down, checking demand, and then being pushed back up into here. So we normally buy when we can get support on this level here. We definitely buy on taking the B wave out here and also the top here. They're positions to add to, but we also use the trading levels coming up through this here as well. So 1, 2, and 3, but we can get into that later. So there's either this pattern here for the setup, or there's a pattern where it doesn't come back down into this space, which is the I call this the classic trading levels pattern. And this is the variation of that, where it doesn't come back down through here. It just has the arrival, the reaction, the first high above the level, and then sits here and then moves up from there. But we always got an order here, we've got an order here. Because if that's the B wave, then that confirms that that's an A and a B and a C at that point. And that may just come down below the level a little bit, whatever, you know, but that high and that high are our setups for that. And then we're on the right side of the closest, largest number, which means for our market timing, we're on the right side at the right time, because we basically trade to the level, we get out, and then we wait for the setup over here. We can go do something else while this is going on, because that's where you lose your money, in this space. So that's what we're waiting for here. So just drilling into that a little bit further on the hourly chart here. So we're looking at it like this. I know that this, well, I've got this labeled here. You can throw tomatoes at me, where I've got wave 1 here and 2 here, where realistically it should be up here and back here. That's okay. Not that it makes any difference. I mean, the NASDAQ, if we look at the NASDAQ here, it fits nicely with having wave 1 here and wave 2 coming back into here, 3, 4, and 5. So we want to see this pull back as well. So that will be, that's got further to come down here yet, anyway, down into this space here, 61.8% will just be lower than that. So down here for 61.8%. Oops, daisy. But that's, that's where the volume's going to be, so it may not pull all the way down into that, so just be mindful of that. And also to here, we've got to get through number 5 is the second strongest number in the market after 1, so the 7,500 here is going to, that will do, well, the market's got to dance with that before migrating from support to resistance. So yeah, I don't know about trading short against this. Of course you can, but we're just looking for an A and a B and a C. So let's see. I mean, if you're going to short it, this would be the place to short it at. This would be the time on the open to short this, and just have a small piece here, and then also add to it once the 500 becomes the resistance as well. So that needs to, it's the classic trading levels pattern upside down. So we'll come down, we'll bounce off this, and then we'll come down and we'll come back and check it, and then we want the market to leave this number, so it needs to take out that low here, and then you know that it's leaving that number. Of course you can short it here if you wanted to. It doesn't matter what you do, as long as you know what you're doing and you're managing your risk. So anyway, that's that. Let's just drill into this a little bit closer. So basically the 2400 we're looking for here. So let me just check if I've updated the 15-minute chart and the tick chart. Okay, so when we're talking about the setup, so we can go long above here. So we could also bring this down to the top of the B wave now, and we can go long at that point there. So that's our first setup here. But obviously we want to try and get down lower than this as well. I'll just check this out here to see where we are with that. Right, so let's come back. It's just the tick chart, just trying to look at that. So it's probably a good idea to go from 15 down to 5, then to tick chart, I guess. But we've got to see how this plays out. It looks impulsive at this stage, which could be the end of wave C, but it could also be down for 1, back for 2, 3, 4, and 5, coming into this space here, and then moving back up here. And this is where we want our long trade here, whatever the case is. If it does create a second high here, we can also start bringing these down until we get clicked in here. We could buy down here as well and get a small position. If you can count 5 waves here, by all means, you can buy in here at the cross here. And if you can count those 5, if it delivers those 5 waves, it might just, there's normally some equality between the length of wave A and wave C here. So this is a 61.8% extension on that. As such, so we'll need to just be mindful about that. But yeah, these lows down here we'll start to see just above the 2400. We'll see that come into play there. So anyway, we might be able to pick that up on tonight's charts. So keep an eye on that. Alrighty, that's it. Sorry for waffling on, but yeah, nothing to really add. Last time we were looking for coming up to 265 area, the beginning of group 2, and then we're looking for some sort of correction back, which we're looking for now, and now we want to have support on this over here. If you know what you're doing, then you can build in here small positions, and once we've got support back on here, you know that you're free to go to the upside at that point. And this is kind of this is the accumulation process through here. So if you know Richard Wyckoff's work, then you'll understand accumulation and distribution, which is definitely a good read if you can get your hands on a book of that. Alrighty.
unless it's done.
Really?
Just holding up some flights.